Police car like Cardano just crashed under 20 cents. But social activity is exploding. Police car light. ADA just hit a 4-year low, under 20 cents, the lowest it's been since 2020. But here's the twist nobody's talking about. While the price is tanking, Cardano's social activity is absolutely surging. More conversations, more engagement, more people paying attention than we've seen in months. This is the exact pattern that happens before massive moves. When everyone's watching and talking while the price bleeds, that's when fortunes get positioned. Let me show you what's really happening here. So Cardano dropped below 20 cents this week for the first time since early 2021. We're talking about a token that hit $3.10 at its peak. That's a brutal 93% drop from all-time highs. Most people see this and run. But the smart money? They're asking a different question. Why is social engagement exploding while the price crashes? Here's what's actually going on. Social activity measures how much people are talking about a cryptocurrency across Twitter, Reddit, Telegram, and other platforms. When social activity spikes during a price drop, it usually means one of two things. Either panic is spreading and everyone's freaking out, or, and this is the interesting part, serious builders and investors are accumulating while retail traders panic sell. Think about it. The loudest conversations happen at extremes. At the very top, when everyone's euphoric, and at the very bottom, when everyone's terrified. We call these capitulation moments. Cardano isn't some random altcoin either. It's an ISO 20022 compliant blockchain. Now, if you don't know what ISO 20022 is, listen up because this matters to your actual money. ISO 20022 is the new global standard for financial messaging. It's basically the language banks use to talk to each other when they move money around the world. Right now, most banks use old systems from the 1970s. Slow, expensive, limited information. The global banking system is upgrading to ISO 20022 between now and 2025. We're talking about SWIFT, the Fed, the European Central Bank, everyone. This affects trillions of dollars moving between banks every single day. Why does this matter to everyday people? Because when banks adopt this new standard, cryptocurrencies that are ISO 20022 compliant can potentially plug directly into the traditional financial system. No middlemen, faster transfers, lower fees. Cardano is one of the major blockchains built with this compliance in mind. So is XRP, XLM, YLGO, HBR, and a few others. These aren't just speculative coins. They're positioning themselves as the bridge between old finance and new finance. Now here's where it gets interesting. While ADA's price is at 4-year lows, Cardano's development activity hasn't stopped. They just launched new DeFi protocols. They're expanding in Africa for real-world payments. The foundation is still building. This is the hidden pattern nobody's seeing. Price action tells you what retail investors feel right now. Development activity and social engagement tell you what might happen 6 to 12 months from now. The market is clearly in a fear phase. Bitcoin's volatile. All coins are bleeding. But ISO 20022 tokens like Cardano have something most altcoins don't, a potential real-world use case when the banking system completes its upgrade. Does that guarantee anything? Absolutely not. Plenty of projects with good technology still fail. But when social activity surges while prices crash, it creates a setup, a potential inflection point. So what should you actually watch for? First, monitor if this social activity spike sustains or fades. If it's just panic, it'll disappear within weeks. If it's accumulation and renewed interest, the conversations will shift from fear to opportunity. Second, watch Bitcoin. ADA and most altcoins follow BTC's lead. If Bitcoin finds support and stabilizes, altcoins like Cardano typically bounce harder on the way back up. Third, track Cardano's development updates. Real partnerships, real adoption, not just hype tweets. The projects that survive bear markets are the ones still building when nobody's watching. Remember, the worst time to buy based on emotion is when prices are at all-time highs and everyone's excited. The best opportunities often appear when sentiment is at its worst and prices are at multi-year lows. That's when the real money gets positioned. This is educational content only, not financial advice. Always do your own research before investing. Crypto is volatile and you can lose everything. Follow Stack Daily for daily crypto and money tips. We're watching this Cardano situation closely.